And thank you for the wonderful introduction, and thank you for putting this topic at the beginning of the day, because it's clearly a topic that I have a lot of passion about, which is digital money and how that's going to change the world. And it's not going to just change the world of banking. Most of us in this room are working in banking. My belief is it's going to go beyond banking, that it's going to start with banking, create a new infrastructure, but have impacts far beyond the way we just bank. If you think about it, the banking, traditional banking there's been a natural ceiling on it. That it's been traditionally focused on the people that have a lot of money, relatively a lot of money. And small depositors or poor people have had very weak access to formal financial services. And that has impacted their life, and it has impacted their ability for them to build their businesses. And what digital money does is it changes all that, because a simple thing like access to electronic payments and money in digital form is a gateway to a very different world for everyone. And I believe within the next 5 years, we're going to experience digital money being fairly ubiquitous around the world, because we're already seeing that start. And one way to think about this is that we already know about 30 years ago in Bangladesh there was a famine, and Dr. Muhammad Yunus, who was subsequently given the Nobel Peace Prize for the work he did to alleviate poverty, he was an economic professor, and he decided that he just couldn't sit around while people were starving, and tried to think about what he could do in this situation. And he decided that what he would do was take this concept of microcredit and make it a reality in Bangladesh. And so what he would do is he took his own money at first, and he did small loans to women who had businesses. And what happened with microcredit is, many of you know this story, but for some of you who don't, I'll give you the short version. Microcredit then changed the landscape of what was possible for the borrowers. They tended to do a better job of taking care of their businesses. They could grow it, they could keep their children in schools, and they could feed their family better. And in fact, the analysis said it not only impacted the family of the lender, it impacted three families in total, because those small businesses would employ other people, and it would actually have a long-term impact on a number of people. So that was the great story of microcredit. But the not so great story was it wasn't very scalable. It couldn't get to everyone. And the other thing was that the actual cost of dispersing the funds and collecting the funds was high. So the cost of microcredit was high. Digital money changes all that. It increases the scalability and drives down the cost. And so it's going to be the gateway to all sorts of financial services, as well as it's going to give us a very efficient and scalable model so that everyone can participate in financial services, and therefore everyone can participate in electronic commerce. I'm not the only one excited about this. There's some really great thinkers in the world, and great leaders like Bill Gates and Melinda Gates are very committed to digital money and making it happen throughout the world. They're especially focused on places where it's not likely to happen quickly or easily. And they're especially focused on going beyond just access to money transfer and into a full range of financial services. Piero Midyar was founder of eBay. He has a foundation called the Midyar Foundation. They're also very committed to this, as is Jeffrey Sachs, who heads the Earth Institute, and Bill Clinton, who has the Clinton Global Foundation. So you have a number of big thinkers, world leaders, who are getting behind this. And so it's natural for great companies like Citi to also take keen interest. And the thing that they believe is it's beyond financial services. It will bring people formal financial services, but it will also bring them economic growth, personal security. So why is it such an exciting time right now? If you think about it, what's happening right now, next 5 years, is that 3 billion new people will be brought into the internet. And these 3 billion people are a little bit different than the first 2.5 billion, in that these people have maybe never had access to the internet before. And that's going to do so much for education, for industry, for commerce, because we're going to have a lot more people collaborating, a lot bigger market opportunities. So if you think about markets, opportunities like Airbnb and Uber, these models, traditionally would have been restricted to, a couple of billion people. Now we have the opportunity to create new models that can access really every person in the world, especially every adult. And of course, digital money is going to be important to all this, because digital money is going to be the currency that's going to be used to ignite sharing, ignite commerce in this new environment. In addition, these 3 billion new minds on the internet are going to help accelerate change in all sorts of industries. We've already seen accelerated change. We've seen exponential growth in computing. We're going to start to see other industries like energy, healthcare, finance start to increase the rate of change and progress in these industries. So but let's get back to digital money. And let's talk about what happened in Kenya. And it really started around 2007. Citibank was actually involved. First time I met the M-Pesa people, it was actually at a Citibank event, a small event like this. But what happened in Kenya was quite exceptional. So much so that today, something like 46% of the GDP of Kenya moves through a very simple mobile wallet on the phones, universal wallet called M-Pesa. And it really, the stars aligned, and it changed almost overnight. About 18 months it took for this thing to happen, and it's grown since then. And what happened, the stars aligned in that the regulations were supportive. There was an easy way for people to be onboarded into the system, in that there was a universal ID system which was reliable, so you could very affordably do KYC. You had a universal network because you only had one mobile carrier. At the time it rolled out, 95% of all people in Kenya had one mobile carrier, and that was Safaricom. They had universal coverage all over the country. And last but not least, they had a very compelling, simple use case, which was most people that worked in Nairobi had family members 50 miles or more from the town, and weekly they needed to send money home. So they had a very simple, compelling use case. And now 10 million, the country has about 40 million people, so assume about half of them are adults. But 10 million of those adults use the M-Pesa wallet monthly. Actually, 13 million use it monthly. And of those 13 million, 10 million of them have chosen to have the associated bank account. So really think of it as M-Pesa account's like a prepaid account. You can't get interest, you can't do much with it except do money transfer and a few other things. But they've also now begun to, expand just from that simple wallet, and they also have 10 million of those people have bank accounts provided by a bank in cooperation with Safaricom. So this is such an amazing change to happen so fast. And one thing I will tell you is just before this happened, I had the privilege of traveling to Kenya. And what was so interesting about that trip was that I went to visit all the banks and asked them if they would do business. I was working on a similar type offering. And I talked to the banks. I talked to Barclays, I talked to Standard Bank, I talked to all the banks, Equity Bank. And it was almost universal that the banks said, you know what? There's only about 3 million people in our country that need bank accounts, and we're already servicing those 3 million people. So there's really no need for any change here. In fact, what we're focused on is how we get a bigger share of those 3 million people. If you go talk to any of those banks now in Kenya, as well as in other countries, they don't talk like that. They talk about how they're doing things to reach and serve this larger audience and what it means for their business. But why hasn't this happened everywhere? And I happen to know a little bit about this because I've worked in many countries, and through writing the book, I've talked to entrepreneurs throughout the world who have been working in other countries. And I really think it's all about the environment, that the need is great, and really having access to digital money, whether it be in the form of a mobile account from a bank or a mobile account from a retailer or from a mobile operator, it's a natural thing. People want it, but why hasn't it happened? And it really has to do with the context. So the stars aligned in Kenya, but the rest of the world that's working on this has struggled in many cases. There's only probably less than 10 successful scaled implementations of similar systems. So why is that? And I think to answer that question, we can look at India, because India's figured out why it hasn't happened around the world, and is laying the foundation so that it can happen in India at large scale. Now think about India. I don't know, many of you are probably from India here, but India is 30 times bigger than Kenya. So it's a bigger problem. And sometimes at scale, it's tougher to do these things. India has 600,000 towns and villages. Only 75,000 of them have a bank branch. So it's impossible, not impossible, but it's improbable that in the next 10 or 20 years, bank branches can be built fast enough to serve and to bring banking and digital money to throughout India. So the lighter weight digital model in Kenya makes a lot more sense. But it still couldn't happen at scale in India for a number of reasons. And so a lot of the private sector and the public sector figured this out, and there has been a huge amount of work in the last 5 years to prepare the environment so that digital money can happen in India. So let me just highlight a few things that have been happening. One is the ID system. In India, a typical KYC, bring someone into the banking system, would cost about $15 US dollars. What would that be, about 10 pounds? Doesn't seem like a lot for us, but if you're trying to bring 600, 700 million people into the banking system, it becomes ridiculously expensive. And a big part of that cost was paper forms and very weak ID systems. People would have wet, state driver's licenses that all look different, and sometimes they'd get wet. In fact, a funny story about this. We worked on an ID trying to bring people in the banking system in India, and we knew this $15 because we measured it. And we worked really hard through taking pictures of IDs and being really clever, and we brought it down to $12. And we were really excited. And then one month it went right back up to $15. And I asked my team, well, what's going on here? Why is it back up to $15? And they said, oh, well, it's monsoon season, so everybody's ID is wet. And so the rejection rate is really high. So that just really tells you, when you're trying to bank 600 million, 700 million people, you have to deal with these environmental and infrastructure problems. And they did that. One of the ex-founders, or he was a founder of Infosys, Nandan Ninkali, he basically left. It's not that he had a day job, because he was very rich and successful. He's like the chairman of Infosys. But he left to start a project called Aadhaar, which was a very high-tech ID system. And now 800 million people in India have this high-tech ID. It's both biometric and card, and it's very safe. And that's creating a system where Kenya could happen in India, because the ID systems are good enough. We've driven down the cost of KYC. It's now much more viable to bring large numbers of people into the banking system. But that's not the only thing that happened. In India, they also did a faster payment system similar to what you have in the UK. So faster payments in the UK is called NPCI in India. Then they said, well, we have to be sure the debit transaction is very low cost. So they did a government-run debit system called RuPay to keep the cost of very small transactions down. In addition, they put an infrastructure together. There's a lot of government disbursements, Those government disbursements are high cost, they're in cash, there's a lot of leakage, there's a lot of time delays. The Aadhaar, they tied it to the ID system, but they're rolling it out so that the government disbursements can be done electronically. Last but not least, they said, look, the big banks are good at things. We have two kinds of big banks in India. We have social banks, or government-run banks, and we have private banks. But they still couldn't imagine those banks banking everyone. So they created new licenses, three types of new licenses: prepaid issuer licenses, small bank licenses, and payment bank licenses. And now new actors are investing in these new models. And all those things are in place now. So I think my prediction is in the next 5 years that India will eclipse Kenya in terms of the number of people brought into the banking system, and it will be quite exciting. But it's a great example of what countries have to do, what industry has to do to make this kind of change happen. Next, I just want to make a special point about regulatory reform, because regulatory reform is so important. If regulations are unclear, it's almost impossible to see these types of digital money initiatives happen, because most people are sitting and saying, well, how do we do it? What can we do? What can't we do? So many countries around the world do not have clear regulations, and that's probably the hardest thing to deal with when there's no clear regulation. The second hardest thing is when the regulators restrict non-bank actors from having any role in digital money. And that becomes very difficult to leverage the assets of retailers or mobile operators or third-party actors, online providers like Google or Apple. They can't take a role if the regulator says everything has to be done by a bank. And so I'm a big advocate for regulatory reform, and most regulators are in the process of reforming to allow these non-bank actors who are trusted to take part in these financial systems. I want to tell a story. I love this story a little bit because I don't know if Aditya's here. Aditya Menon, are you in the room? He's the speaker later. But I love this story because it tells the story of, despite all that, you can still get stuff done, right? So I told you the perfect world, you have new infrastructure, you have public and private sector initiatives that work together to make all this happen. You have regulators reform. Well, there's one place in the world where this isn't happening at all, and that's the United States. And the United States is actually in kind of a little bit of gridlock with payment regulatory reform. It's state regulated, so there's 51 regulators, 50 states and 1 Fed. And so it's very difficult, and they're not in the mood right now to reform their regulations. So and they're a little bit, they're putting a lot of burden on all payment actors to do stuff. So you've got that sort of toxic regulatory environment. The other thing you have is that while the UK has built this beautiful faster payment system, they're still in committees trying to figure out whether they should do faster payments. So it's not happening there. And so there was this little company called Omni. And this story's pretty new. It was about 2 years ago. And they had been involved in innovative payments and knew how important faster payments was. So they built a private network to do immediate settlement to all bank accounts in the US and all prepaid accounts. So they built that, and they developed an API so that other businesses could use it. They knew from a regulation standpoint that if they opened it up and let anybody use it, that the regulators would shut it down. So they said, let's find a non-regulated transaction where businesses are doing disbursements, and let's implement faster payments. Let's build a business around faster payments. And that's what happened. And it's funny, it is really a network of networks. They didn't go do new wires to all the banks. They took existing pathways that were real time. Mostly the ATM networks, but not all the ATM networks. They also used other third-party networks, like the MasterCard MoneySend network. But they used a number of networks and got over 95% coverage. Then they started to market it to, they marketed the infrastructure to businesses. And they identified, okay, the insurance company would be the biggest users of this business, because they're still running, a typical insurance company in the US still has to write 20,000 checks. Crazy, right? For claims. But the insurance companies, although they signed up, didn't drive a lot of transactions because they had so many legacy systems, so much to change. But the first wave of users of this faster payment network were the Ubers and the Airbnbs, because they had lots of business relationships in the United States, and they wanted to be able to pay in real time to their SMEs. And so that category of user started to be the first user. This company had the network live within 1 year and had $1 billion in volume within year 2. It's since been bought by MasterCard. It's bought almost immediately. But I love this story because it says, in a toxic regulatory environment where the government should build a faster payment system, but it won't for a while, still in committee. I don't go to the committee meetings, but I know that this is an example of the kind of innovation that can happen. And I love the story, and I love the kind of thinking outside the box, because these systems are so important. And I actually believe that in a way, this project will be successful and continue to be successful. I'm sure MasterCard will scale it quite nicely, but it's not, I think it will actually increase the chance that the committees will come to the decision that they will actually do something and build a faster payment system, because they'll see the value to business. Okay, so let me switch gears for a minute and talk about what I'm going to encourage you to do. If we think about digital money, there's a lot of excitement about Apple Pay and, sort of Uber and all this sort of stuff, and all this social Facebook payments and things like this. But I think we as a community should reframe banking, not do what the thinking in 2007 by the Kenyan banks. Not think about this as, in the case of the Kenyan banks, they thought of it about 3 million people were the customer base instead of 30 million adults, or 40 million people in Kenya. I think we should reframe our thinking about what the opportunity is to one that we're standing at a moment of time where we can move from banking for the elite to universal banking. It is within our reach. And if we reframe it that way, then I think it opens up to even more innovation. The way I think about it is like landlines. It's hard to believe. There's some people here young enough that they won't remember this, but for us older people in the room, landlines used to be the way people communicated, and only people with permanent houses that had enough money and were living in the right place could get a landline. And all landline did was voice. That's all it did. But now we've gone through multiple phases. And one of the key breakthroughs was in the early 2000 timeframe with the dumb feature phones, which were just a little bit better than landlines in terms of functionality. You could do voice and you could do simple text. We built a business model where anybody in the world, through the prepaid model and the prepaid distribution model, anyone in the world could get access. The limiting factor was the infrastructure, not the cost model. Then we took another gigantic step when smartphones happened. And we went from a closed garden where only privileged few folks could put applications on that phone to where the world could use the platform to deliver value. So those two giant steps have brought us to where we are today. And I want to think like that when I think about the future of banking. And the fact is, the future's already here. It's just not evenly distributed. This guy is a Canadian writer, and he brought us this quote. He was the first to coin the phrase cyberspace. I don't think he's even a technologist. I think he's just a writer. But he thinks about the world in big ways. And when I did the research, when Carl and I did the research for our book on financial inclusion, and we went around the world and looked at what's happening, what we saw is the future is here. It's not evenly distributed. And in some cases, it's in early stages. It's going to get better. But the examples we saw of what's happening out there really got us to think a lot bigger of banking. That we really could achieve universal banking, and there could be a ton of innovation that went with it. And the book, Financial Inclusion, at the bottom of the pyramid, 80% of the book is all about these examples from around the world of where the pioneers, from big companies and small, are really reinventing banking. But they're just in small scales right now. And we together as a community can make that scale different. And here's some of the people. They're mostly young. Almost all of them end up starting with big companies. A lot of them go and do their own companies, but that they end up, like the Omni story, they end up partnering or being bought by others, because it's really not a solo act here. But these are some of my favorite projects and favorite pioneers represented here. I'm going to give you a few examples in the last few minutes I have. One is a guy named Richard Leftley. He is from around here. He didn't live in London, but a little bit outside London. He had the most boring type job. I don't know if it was boring to him, but he was an insurance underwriter. That's what he did. And he happened to go on vacation in Zambia. It was kind of an eco-vacation. And he lived with a family in Zambia. And he found out that the family in Zambia had a death in the family. And they had taken many steps forward in saving money, but when the death happened, they took 5 steps back. And they had no death insurance. So he was determined to offer death insurance to Africans. And so it actually became bigger. He started a company named MicroInsure. That company offers death insurance in Africa and Asia. Only 1% of people in Africa and Asia have insurance. And he wanted to develop an insurance product that would change all that. It's a small policy, costs $1.50 a month. And it's death insurance, and he pays out predictably in 72 hours. Big education challenge. He got the mobile operators to bundle this insurance policy for their loyal customers. So last I talked to him, he was adding 9 million Africans a month to be insured for death. So he's getting great scale. This was funded by the Bill and Melinda Gates Foundation initially, but now it's been privately funded and gotten private venture capital. Juntos is, I don't have time for all the case studies, but Juntos is one of my favorites. One of the things about digital money and mobile money specifically, when you get a newly banked person a bank account, the dirty little secret is they don't usually use it. It's dormant. And if you look at it, it's because they don't understand how to use it. They haven't figured out how to use it. So dormancy is really high. And it's limiting a lot of things in terms of getting a critical mass, getting the economics around digital money correct. Well, Juntos figured this out. This is a Stanford design school, MIT technologists came together, and they have a big data model that analyzes the situation and then sends customized engagement messages that are a combination of encouragement and education to the users. And it reduces dormancy by 35%. In a recent thing they did, they just worked in Tanzania with Tigo, who was rolling out. They were trying to get people to use the mobile money for more than money transfer. And I don't know what happens after it goes to zero. I gotta finish the story. But they rolled out way to pay through your mobile money at a merchant, at a small retailer, but no one was using it. And then they used Juntos's text messaging engagement model with merchants and with the consumers, and they had a 168% increase in use of this merchant pay immediately. In addition, the people that used it 69% more every month. So great model for thinking about how you engage folks. I'm out of time, but what I wanted to say is there are a number of digital money mobile wallets which are not in the Safaricom model. It was kind of Safaricom with a bank at the back. These models are much more collaborative. They're sometimes independent operators like Bcash, but they're in partnership with banks. So Wizit is a bank in one country, but in other countries it actually partners with banks around Africa. So I think what we're seeing is in many cases, Wing is in Cambodia and they're in a big partnership with a big bank, is that sometimes this simple model that Safaricom made so successful can be implemented in partnerships, and it needs to be in many cases. So I think we need to shift. I invite you to reframe banking from it's about banking for the rich to banking for everyone. And in addition, that banking becomes a platform for innovation. One last story for you on banking. I had the privilege of escorting one of the top bank CEOs from Europe in Silicon Valley, where I live. And we went to Google for a corporate visit. And I was trying to influence her and say, you know, you need to think about more and more innovation in the bank. Instead of 1 or 2 product releases a year and a few new innovative products, think 10x or more. And she was listening to me, but, you know, who am I? She was in a room with Google where one of the executives of Google explained that how many products they had, which was impressive. But the most impressive thing was that Google told her that for every product, search, whatever product they have, they do 400 product updates a year. That's how fast they move their technology. And I thought she was going to fall off of her chair. And I was going to fall off my chair. 400 product updates a year. And it said to me that, wow, this is really a new world when you have a technology, an e-commerce, a digital leader explaining how they think about their business, how fast they move. And you don't do that with just pure will. You have to set yourself up for innovation. And some of that innovation happens inside the bank or inside the financial service provider. Some of it happens with partnerships outside. And I want to encourage that reframing to universal banking, and banking's a platform for innovation inside and outside the bank. And just to leave you, I think our job, and we have an exciting job, is to create a financial system that leverages all this great new technology to bring to the world affordable banking that empowers people's life and work. This is the book. I encourage you to read it if you love this topic. There's even more stories in it. And also you can follow me on Twitter, and that will also be a way to get plugged into what's happening around the world. Thank you.